Good morning and welcome to the early bird. And here we're looking at the Shanghai market. And as you can see here, it's quite bearish. This is a daily chart, and it's still sort of heading down. And what we've sort of got here, I guess, is that we've got a five-wave structure coming down through to here in terms of 1, 2, 3, 4, and 5, and so we could label that sort of wave 1, and then we've got sort of back for wave 2, and then we've got down for 1, back for 2, 3. There'll be a 4 coming in here and a 5 coming down, but you can see that it's pushing down really quite strong. And this is the same for China as well with the Shenzhen market here. You don't need to be Einstein. You can see that, I mean, if our market is based off this, then, it's this is really falling out of bed here. So just be aware of that if you've got any long positions occurring out there, or thinking of going along because you're missing out from yesterday and perhaps today because of base metals being up. Yeah, so, okay, that said, just have a look at uh, how to buy on lows really. CBA here. I'm going to use CBA because it's got some good patterns in here. Look, I think one of the best patterns to buy off the low with is the switch pattern, and this is it here off these lows here, and simply is that the market's been coming down and then it moves up for 1 to 3 days. It can be 5 days, but nice to have it in sort of 1 to 3 days. So we've got this low here, we've got it moving up, and then quite simply that as it moves up through here, we want to see a low taken out. So in this case here, this bar opens here, comes down, checks into the market depth, finds support, and then moves up. But it's got to break the previous bar here and then move up from there. And then we can take that high there and then move the stop up through to here. Okay, and that's the same with this situation here as well. It's just such a good way to buy it on the lows. You could also do it in the trend as well. You see that's moved up and come back here and then moved up from here. So it's just a way of getting in. There's another one there. The same with going south as well. This one here didn't really quite occur because this took the actual low out, so that's not there. But the important thing is that it's not so much the perfect pattern, but it's more so understanding the situation in terms of the market checking for depth. And in this case here, you can see that the volume here really pegged that price there. So the volume is your support in this particular case here. You can see that these people that moved in here, they sort of controlled the market, and that's them there getting out there. So when you see a price bar going up like that, that opens high and closes lower on high volume, you know that what's occurring there. So currently with BHP, look, with CBA, we know that it's on the major level here of 50 here, so we know it's going to find support here. So that's good. If you went long today, we've got some nice volume there. If you went long today, you could take that top out there. Keep the stop reasonably sort of close to this. And this is just an example of using on any stock. I'm just sort of pointing out a few basic things here. But using the robo method, you can control the risk a bit better. So at least you know where you are, before you enter the pit, so to speak. Okay, all that said, just wanted to point that out. So any trades that you're going long on today in any of the base metals because they're up, then you understand what level you're working with, and use the robo method. If you can use the volume and the market depth too, and the sub levels, well then you're far better off still. But it's not the time to go into that right now. Okay, this is the S&P 500 here, and what we've got here is first of all, we've got this overhead trend line that's coming through here, right? So thought we'd get a bounce off the 1300 here, and we're just going to observe the pattern here. Now the pattern so far is that we've had a nice little 5 waves up to here, then we've had the A, the B and the C back to here. So we could call this the A wave up to here, or wave 1 up to here. We can call this wave 2 or the B wave to here, and we can call this a third wave up here, or we can call it a C wave. As a C wave, then the market would finish here, and then move down from that point there. So they would have that A, B, and C here, and then would roll over from that point. So that's a possibility. I just don't know, and because the structure hasn't developed enough to allow us to get past that point. If we've seen the first 5 waves here, then we know we're going to get another 5 here. That's not a problem. And especially after you get a 3-wave correction like this here, you know that top's going to be taken out. So that's not a problem. That's as far as we can get now. So we need to see if this is going to turn into a strong 3rd wave up here, or it's going to sort of fade out as a C wave into here and then roll over from here. And this is both are on the table. The low volume because of the holiday in the US on Monday coming is likely to see lower volume traded tonight in the US. So we could see maybe a softening in volume here. So we could say that on the S&P 500 as a bit of a guide stick here is that if the 1330 top of subgroup 1 found support, great, then we can move up from there. And what we'd want to see there is the up to here reaction, first high above the level, then an A and a B and a C, and then finding support on it there. Look, exactly like this here, that's fine. Yeah, moving up, the reaction, first high above the level, the A, the B and the C here, you know, and also like here, checking of support. We want to see support on here after a correction. That will give us the further upside indication there. If this market, or this price rather, found resistance under this level here, and this would be a resistance here, like can't find support up there, it's retesting it but failing from that. If we see that there, well, then we can start to look at like a bigger picture coming down here. And if it does come down, it will come down quite sharply as well. So that's why we don't want to get trapped, you know, with the too much on the long side of this moment. But either could happen. It's just, you know, which one, how do we approach it? So yes, the markets are going up based on the base metals, and you know we can go long based on that, but we just need to really control the trade and control the risk and understand the risk that lies ahead, and the risk that you hold in your hand at the time. So, and this would be the same with the Dow Jones as well. The Dow Jones on the actual index itself, if the Dow Jones index itself came down under 12,350, then you've got a bit of a problem there. So anyway, Dow Jones trend line through the top here, 12,500. If it got back up on there, then we've got support. But we know that as this market came through here, it hadn't actually retested the 12.5, and yes, it may have done it off the 12.3 here, so it's doing that. We can see that the 12.4 here is the center point in all of this, so we can say from here on in pretty much with a bit of leeway, because we've had 5 waves up here. We can call that the A wave, then we've got the B wave here and the C wave say to here. So we've got a little 5 waves up there. There could be another one to go up there. You can see that sort of occurring because a strong 3rd wave in the middle here. Normally the C wave would be about the same as the A wave there in terms of time and length and so forth, but retesting sort of back into this sort of area here. But if we've seen this price lock under the 12,350 here, then you know that you've got a problem, because if this was going to go up for a big strong 3rd wave up here, like we talked about on the S&P 500, then we would see 5 waves up to around here, 3 waves back into this sort of area here, and then a push up from there. So realistically, if the price on the actual index itself, the Dow Jones index, rather than the futures or the CFDs and whatnot, under the 12,350, then there would definitely be a trigger to go south then. But you'd still need to navigate through all this stuff here as well, the 12.3 and so forth. But at least we would know where we are at that point there. So we can, that's just a trigger point there. So we can use that. Okay, the FTSE, I just want to talk about for a moment. Bit of a different picture here and a bit more sort of bullish here actually, because from this low here we can see that there's 5 waves up through here in terms of the 1, the 2, the 3, the 4 and the 5 here. So we can expect an A and a B and a C across here, and after that, if it finds support on the 5-9 here, then we can look to go higher. So that's something to look forward to. Now this 5 waves here should give us another 5 waves up here. The only place I could have made an error there if it falls out of bed here, and if it finds the 5872 here as resistance, then you'll need to look to go to the southern side of this and trade short. Now this wave structure that we've had down here, I feel correct, and this is why we can get this 5 waves here. The only place I could have made a mistake if this becomes a resistance in this area here is that this 5th wave here would be here instead of the 3rd wave here, and then we would have the A, a B and a C wave to here. That's possible, but I don't know. In terms of coming down through here, I look at this as down for 1 here, coming back for 2 here, and then we're looking for 5 waves down for the 3rd wave, which would be the 5 waves for the 3rd wave would be down to here, and that would be in terms of the 1, the 2, the 3rd wave here, the gap in it, then the 4th wave to here, and the 5th wave here to make up the 3rd, the 4th wave back to here, pulling back the 38.2% mark, and then the 5th wave down to here. So that looks quite, it looks okay, it looks fine, it looks good like that, but I'm just pointing out if this becomes, if S subgroup 2 here becomes resistance, then you want to put a small short position there and then look for one under the midpoint here, and then we'll look to hold much longer term to the downside. So anyway, that's the levels, that's the wave count, and either way we just need to give that a session or two to work itself out, and of course the other indices will give us a lead there as well. Our local markets here, the ASX 200, yesterday we'd seen, you know, the 5th wave, we're counting the 5 waves down here, that had all finished, and now we're sort of moving up through here. So we've got a nice strong move up here, so that's pretty much sort of 5 waves up to there. BHP in the US was up 1% and a bit, so and the base metals, so we'll see a move up through there. I haven't checked the 4 major banks in the US. I should start doing that again, but you can have a look for yourself. So we'll see that. We'll see the this is going to be strong resistance up here, so this is one of the problem areas here. So on the SPY here, we knew that we're going up off the 4600, not a problem, but the problem will come in around the 4700 here, and you'd need subgroup 2 here early in the day here to have some good support here, and the 72 is always a nice number to work off. But once it gets to 47 here, there will be, it will just be a sticky number because of the lower volume in the US trading. So just be aware of that. If you've been trading long up here and you want to hold, that's fine, but you could reduce into the 4700 here after we get that strong any move that's soaking up the move from the base metals today. Also, being Friday as well, if we get a really strong close on strong volume, then we can expect that to carry through to the Monday. If we get this afternoon, if we get a sort of a softer close or lower volume in the afternoon session, then be a bit wary about the situation of holding over the weekend. So strong volume Friday afternoon, very helpful. No volume or low volume, not a good look. Okay. The drivers, looking at copper here, very central. Copper's used in pretty much everything. That's why we use it. So we can see we've been tracking the 5-wave structure up. So we've got the 1, the 2, look for the 3rd, the 4th, which that would be the 4th there. Yeah, bit out of whack with this, but that's life. And then we'll be looking for a 5th wave coming up. Now, there was no extension in the 3rd wave here, or slightly. So we expect this wave here, wave 5 here, to be down here, probably about the same length as this guy here. So we could probably put that there. So somewhere in there, we can expect a reaction at the 20 there, and then we expect a reaction there. So after this 5 waves here, we'll see a softening in here, and either an ABC or a impulse wave to the downside, but should remain reasonably positive here for the near term. Okay. Crude is yeah, it's sort of getting there. It's a sluggish sort of thing, but we're seeing look, it was resistance. Now it's checking for support, and this is the move up here. The move up is sort of the arrival, the reaction, the first high above the level, the retest here, and the correction that will start in here. But we're looking for support on the 100. It will take time to develop here. So it's not going anywhere, put it that way. So it will just be steady here. Any energy stocks will be sort of steady and will take lead from the materials sector there. The gold is a bit of a different story here. What we've been looking for here is obviously the move up through here, and we've pinned it down the bottom here, and we've watched it move through here and all the rest of it. Now we've got two situations here. We've got it as a 3rd wave or a C wave. If it's a C wave, then it's ending here, and if it's a 3rd wave, it's going to be making new highs much further up through here. So this correction here, this is pretty messy through here. So I'm calling it a 3rd wave, and we'll call this the 4th wave. Okay. Now, if this price continues to move back down here, then there's been an error in this messy structure here, and that 5 wave would be in there, and that would be a C wave on top of that situation there. But while it's above the 1500 here, it's going to remain reasonably positive. Yeah, so that's that. So we knew that we had to be cautious around here. Yeah, if it moves under 510, we've got a bit of a problem at that stage. Even finding the 1520 as resistance is a problem as well. So at the moment, it's just doing its thing with it. But any sort of locking under the 20 here, you've got a problem, and then even arriving down here is a problem. Yes, there will be a bounce off it, but once it comes through and locks under there, then you're in the 2nd degree of problems, and then under here as well. So normally when you're trading, intraday trading, and you're using the sub levels, what the normal go is to trade to the top of group 1, get out, allow for the correction to unfold, and if ever that it eventually, after it's done an ABC correction, getting the first high above the level and all that sort of stuff, and find support on top of group 1, then we go long again from there. And that would be the same at the S&P 500 at 1330 as well. So trading to this point and getting out, it's very high probability stuff. Not perfect, but who is? But it's worth having as a backdrop for whatever indication that you're using. Yeah, this is a good example of support here, as a retesting support here, because the price has pushed up through it and then come back and found it. And then you just have to wait and ask yourself, does that market have support yet? If it was here, it would be no. And if it was here, where it pushed up through here and came back and sit on it here and then started pushing up, then you think, well, yeah, that looks like support there, doesn't it? Do you know what I mean? It's sort of like under here it wouldn't be. So what you're looking for is this price action first, to push it up above there and then come back and test it, and then get up there and get it from that point. Then once you've got that, you get from here to the next level. Okay, the Forex here. Now, it's going to have a look at the dollar index here. It's come through our trend line through here, so it's in a weaker position, which puts the indices in a stronger position. Okay, so now we can consider this an A and a B and a C, and I was looking for this to come down. Yesterday we had this one, this one, this one, and we were here. So we knew we wanted to get one more as the fifth wave here. But this is starting, it's okay even to here, but we don't want to go below here. If we go below here, again, then we've got a problem, but it would be a problem in terms of the S&P 500 getting stronger, and if the S&P 500 is getting stronger, then the euro is going to be in line with the S&P 500, and that's also a probability as well. So, yeah. So, yeah. So if we have a look at so the current situation here is that you can see this here quite clearly, is that it's an ABC. Well, it's a three-wave structure. So we've come down and we've got this three-wave counter trend here, right? Then so that should be complete there at that level there. Then we've come down through here. So we'll be looking for a retracement level back to supply, and the supply would start all these here. Supply are all the people that bought here, because as this comes up here, they'll want to sort of end their grief and get back to break even and get out there. So that's why it's going to be resistance at this level here. So yeah, but look at the S&P 500 at this point here, because the bigger count here is to go down through here, yes, but while the S&P 500 is moving up and has got that count to go up there a little bit, then this is not going to move down through this. So pay close attention to the US dollar index and its levels, and also the S&P 500 and this market. So you need to work the three of them within that market there. And the Australian market here, the bigger picture here on the 1 hour chart here is we've got this trend line coming through here. So it is a resistance through here, but there is a positive note here, and it's in the structure here. So the structure here is that we've got an impulse wave to the upside. So essentially, this is basically a five-wave structure here, and you can see that on our charts here. So it's going to probably end within here somewhere into this trend line here, and then we'll be looking for an A and a B and a C back through here. On the sub-level side of things here, we're just talking about subgroup 1, and this is micro group 1. We're on 106 here. We've got 10, 20 and 30 here. You can see how we got support on here. This was in here this morning. I thought that this may drift back into here, but time goes on. So but you can see that that's got support there, so we'll move up and trade to the midpoint here. So when you're at this midpoint here, you know that we're looking for, there is resistance up here, and so if you're trading long through here, you would want this price to do pretty much something like this here, or in either one of these here at these levels here. So you don't want to race in at the beginning of the situation here. You want to wait, let it get time, so it comes back and checks, that retest coming back and checking there, and then getting up there. You know, that's where the safety is. On the close of market, this will come back to the 4 here until New Zealand opens, which it probably has. And yeah, anyway, the midpoint here, we know we're looking for a top in a five-wave rally here. So we're looking for 5 waves coming up through here into this resistance sort of area up here. So there will be selling into this area here. You probably get that trend line in better stead there. But what I wanted to point out, this 5-wave structure here is a positive thing. So what that means is that we'll get another 5. So after this 5 wave is complete here, we should get an A and a B and a C wave back over here. So we've got 5 waves up as an impulse wave, an A and a B and a C wave. Once that's complete, then we should have another 5 up. So we'll see how we go with that. So But we're looking at, this is the fifth wave from here going up to here, so you need to count the 5 waves in there. So coming back to this 2-minute chart here, works quite 2 minutes works on this chart quite well. So just at a quick glance here, I could see that this is up for wave 1 there because there's 5 waves in it, 1, 2, 3, 4, 5, and then back here on support of the 80. So that's up for wave 1 and back for wave 2. And just bear with me for a second in here. 1, 2, 3, 4. Then I shouldn't do this while I'm doing that there. So we've got 1, 2, then we've got 1, 2, 3. No, that's 1, 2, 1, 2. So it's expanding, yeah. So that's 1, 2, 3, 4. So it's the top of the, that should be the top of the third there, but I can't see why that fits in. I'll have to do some work on this later. But look, this looks like the top of the fourth here, something like the 1, the 2, the 3, and the 4th to here. So this would be the 5th to here. So there would be something like, it's 5 waves to there. So it'll be 1, 2, 1, 2, 3, 4, 5. We should end up here somewhere, but make sure you got support on the 40 or the 50 before you to move up. Just make sure that you've got that backing checking there. Alrighty, well that's about it. Yeah, that's sort of covering everything. So you know the risk that that we're looking at with the markets, the S&P 500 and the Dow. You know their resistance points. You know their support points. You know the triggers to go long or short. And on the local markets, using the robo method, or you can look for some switch setups, or sort of any new highs where you can sort of control the risk, so to speak. Even moves that have come down like this, that have had, maybe you've had yesterday up or the day before up like that, just taking the high out and keeping the stop in there. You can check the volume in the market depth to find out where the big orders are sitting, to place the stops around those positions there. Alrighty, well, good morning and good luck.